This is crazy. So the null, do you have 2s10s on here?
Two stents, yeah, yeah. Two stents is TUT. Scroll down a little bit more, a little bit more, a little bit more, a little bit more. Right there, TUT. And that guy's been rallying like crazy. It's been the one that's been rallying the most. And you can and if you look at the top part of the outrights, the green line is the ZN, and it's the one that's been getting hit the hardest. And the 2-year is not getting hit at all relative to the 10-year. So that does make sense. Like, they're both indicators, the outrights and the bottom one are in sync, right? They're telling us the same thing.
This is awesome. And this is how people could really understand just by going through exercises like this, because, right, this is the entire curve. 2s10s, 10s UB.
Yep.
And so when I'm always doing those bond presentations where I break it up and say, if the null's down here, we know the TUT has to be here. And you can clearly see this, the disconnect between the two.
Yeah, no, absolutely. And I think that in this format, it'll be a lot easier for you to do that, to show that, just because we don't have to worry about the rolling, the look back period always rolling. That made I guess it displaying a little bit difficult.
Hey everybody, it's Jonathan. So now this is the very next day. So May 18th, Pablo and I met May 17th to finalize the indicator. But I just want to show you the changes that have happened. And this is trading. Having a reason for doing the trade, having a thesis, being able to express that view or that thesis in the market in the most efficient way. So same chart as yesterday, but the bottom is that null, which is the difference between 10-year yield and 30-year plus yield. The top is 2s10s. So the difference between 2s and 10s, the difference between 10s and 30-year plus, and the red is the difference between 2-year and 30-year plus. So you can see the yellow plus the white is the exact same thing as the red. These are just the two different components that make up the red. But today, you're getting a massive rally from the null, which is the back end of the yield curve. So the back end is steepening after it's flattened for a long time. And the front end has been steepening for a long time, but today it's finally reversed and now it's flattening. So as we can see, the entire curve really not doing very much, but the front end of the yield curve and the back end of the yield curve were disconnected. These are trade opportunities. This is exactly what we're looking for. And then we just look for the best way to express that opinion. Now, like anything worth doing, this trade needs to be learned. Okay, it's not just selling 10-year, selling 30-year, or buying S&Ps. But once you learn it, the juice is absolutely worth the squeeze. And this is a post for my advanced bond room talking about the trade. The trade's coming in huge, and we can see our bond traders taking advantage of this great trade. If you want to learn more about this trade, guys, email support@activedaytrader. Attention bonds. We'll get right back to you. Thanks for watching. Hope you found this informative. If you liked the video, please give it a thumbs up, subscribe. Lots more of these to come. Thanks, guys. Jonathan Rose, Active Day Trader.